All right, guys, this is King Wesley speaking. So still on liquidity, all right? Still on liquidity. This should be the part two, all right? And we're also gonna have other videos on liquidity. That's to tell you how important liquidity is because like I said before, if you do not know how to trade the liquidity, you will be used as the liquidity. Okay, so pardon the way I might sound. As of the time of recording this video, I am not really strong health-wise, but then of course we can still go on with the video, all right? So now liquidity pertains to a currency pair's ability to be bought or sold without causing a significant change in the exchange rate. All right. So if there is a significant change, it isn't called liquidity anymore, right? So liquidity concerns currency pairs. It concerns the ability of currency pairs to be bought and sold without causing a significant change in the exchange rate. Now, that is one other definition I can give you about liquidity, all right? But then let's go into something more practical, all right? So we have two types of liquidity, like I said. Um, we have the external liquidity and we have the internal liquidity. I think I should write them down somewhere. We have external LQ and we have the internal LQ, all right? Okay, so these are the two types of liquidity we have, all right? Now, when you talk about external liquidity, okay, basically we are looking at what the swing highs and swing lows. Okay, when we talk about external liquidity, basically we are looking at what swing highs, and what swing lows, right? So when it comes to swing highs and swing lows, in terms of external liquidity, let me show you what we are trying to say. Okay, I'm going to give you an illustration, and then I'm going to go on to the live chat to also show you an example there. Now, where is my part? So, all right. Now, when we have a swing low, swing high, like this, okay. Now, when we have something of this nature, or let me give you something more realistic, okay. Let me say we have something of this. No, sorry. Let me say we have something like this. Okay, now when we have something like this, all right, you definitely know that this is a swing low, all right. This is a swing low. We have this as a swing low and we have this as a swing high, all right. So when we talk about external liquidity, we basically mean that if price should tend to go above, if price tends to go below this low, we've had what external liquidity taking, all right? If price tends to go above this high or below this low, we have external liquidity taking, all right? So let's assume we tend to see price do something like this. Then price has grabbed external liquidity, all right? If we see price go below the swing low, price has grabbed external liquidity. Or just maybe um we tend to see price do something like this. Okay. Then price has grabbed external liquidity. All right. So basically now the external liquidity is lying above here. External liquidity is lying above here, right? And below here as well. Okay, so basically that's what we talk about when we refer to external liquidity. Now let me go back to the live chat and show you an example of external liquidity. Okay. Now take a good look at what you have on the chat right now. Maybe this time frame is not giving us what we want. So let me go back to maybe H4. Um, okay. Now you can see this is a swing low over here, all right? We have the swing low over here, and you can see that price went below that swing low, all right? So price went below that swing low. So at this point, we've had external liquidity taken. Okay, we've had external liquidity taken. the break of this low, price has grabbed external liquidity. All right, so that is basically what we talk about when we talk about swing highs and swing lows in regards to external liquidity. All right, so now when we go on to talk about internal liquidity, now for internal liquidity, we want to be looking at stuff like the trend line liquidity. All right, like trend line LQ. Want to look at relative equal highs or just, yeah, let's just say relative equal highs and and what's the last one? And then inducement. All right, inducement, inducement. Okay, perfect. So now we talk about internal liquidity. These are the three things we refer to: trend line liquidity, relative equal highs, liquidity, and then inducement. All right. Now, when we talk about the trend line liquidity, we are looking at something of this nature. I'm also going to show you an example. I'm also going to show you a live chart example on this trend line liquidity. All right. So basically, talking about trend line liquidity, we want to see something of this nature. Okay. All right. So basically, now we have a trend line here. We have a trend line here. All right. Now, we'll be looking for price to do what? To actually grab the liquidity line above this trend line and possibly reach out for some area above here and then sell from there, okay? Because above these trend lines right here lies liquidity, okay? Above these trend lines right here, we have tons of liquidity line above them. So in most cases, you're going to see price do what? Go up to grab liquidity and then go on to sell. So this is an example of trend line liquidity. Let me show you a live example of trend line liquidity. Okay, all right, now this is an example of trend line liquidity. You can see it over here, all right? You can see this is actually a trend line, all right? So price did what? Price went up and then came down, broke the trend line, grabbed the liquidity, and then you can see it pumped up from here, all right? So price broke the trend line, grabbed the trend line liquidity, and then pumped up from here. So that is basically an example of trend line liquidity. So the next thing you want to talk about in terms of internal liquidity is the relative equal highs. All right. So the relative equal highs. Now something else you need to know about relative equal highs is that they need to be equal. All right. They must be equal. They should be equal. All right. So we do not want to see one leg higher than the other. No, 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 no. In terms of relative equal highs, let me give you an illustration of what we want to be seeing when we talk about relative equal highs. Okay. Let's say we have this, okay? So perfecto. So at this point here, okay, relative equal highs. They're relative equal highs. So above this equal highs, we have liquidity line there, all right? We have tons of liquidity line over there. So definitely price will want to grab it, okay? Price will want to scale up above it and then grab the liquidity and then continue the movement, all right? So in terms of relative equal lows, because it does not only apply to highs, it also applies to highs and lows. So in terms of relative equal lows, let me give you an example of that also. So for relative equal lows, we want to actually see something of this such. Let me just draw them together. Sorry, what am I doing? Okay, so in terms of relative equal lows, like I said before, we actually want to see price do something like this, all right? Right, so at this point over here, so at this point we have equal we have equal loads. So definitely, as you know, there is liquidity lying below this equal loads over here. We have liquidity lying below the equal load. So definitely price will want to scale downwards, grab the liquidity, and then go back up. All right. So now in terms of inducement, inducement is really an interesting aspect of liquidity. Okay. Now inducement most times will come in line with your entry. Okay. So let me see, maybe you are looking to buy. Let me see you've had your equal highs. All right. Let me say you've had this. Okay, no. Let me do something else. Now, let me say, let's say you've had this, okay? Now, at this point, you have your equal highs, all right? And then usually price will come to grab the liquidity above them, all right? Now, at this point, this high you see over here is your inducement, okay? Now, at this point, you see right here is your inducement. So you most likely see that price will grab your liquidity, and then close to where you expect to take entries, there will be an inducement. All right. Now, some people tend to trade inducement in the sense that okay, they just they just put their maybe their short position on the inducement. All right, put their stop loss above this high, and they take their trade. All right. But then some persons, okay, depending on how you actually want to trade it, they'll prefer to maybe look for a fair value gap or another block above the inducement, then put their entry there, okay, and then tend to take the trade. But me, most of the time, I would love to put mine on the inducement. Okay, I would love to put mine on this high, because when price actually grabs your liquidity, price in most times, in most cases, will not mitigate your entry. Okay, because once price has actually grabbed your liquidity, it's not looking for any other thing. Okay. Now the reason for this is because liquidity can also be used as entry. All right. Liquidity can also be used as entry. I'm going to talk about that when we get to entry models and trade entries, all right? But then once price has grabbed your liquidity, anything can happen. Price cannot decide to just grab your liquidity from here and then decide to sell down. Okay, price can actually do that. It must not mitigate your order block or fill in your FVG. No. All right. So once price has grabbed the liquidity, you can also use liquidity as entry, or you can also use your inducement as what? As entry. You feel me? All right. So now I'm going to give you some rules guiding this. All right. Now, when it comes to trend line, once we see three taps on your trend line, okay. Um, once the three taps into the trend line, the confirmation to get ready for price to reach this level is quite obvious. All right. So basically, once you see three taps, at most three taps on your trend line, you should begin to expect price to actually take out that trend line liquidity. All right. Now, when it comes to inducement, okay, what validates your inducement is that you want to see that your inducement, or the fake high that was created um has maybe broken a high or a low. Okay, let me give you an instance. Okay, I'm going to use the part tool to illustrate. We're also going to have a whole video on inducement again. So for now, just get the slow the okay, the little information on inducement. We're gonna have a whole video talking about inducement. All right. So let's say we have this. Okay, let me see. We have this. Let's say we have this. All right. Now, let me draw this in a more better way. All right. So, like I said before, we want to make sure that our inducement has broken. Right. Want to make sure that our inducement has broken. Space for that. Want to make sure that our inducement has broken. Right? So this is it. Okay. Now, this point happens to be our inducement. Okay? This point happens to be our inducement. This point happens to be our inducement. Right now, this inducement, the move has taken out this previous high. The move has taken out this previous high. All right. So this inducement is valid. Okay. So if this occurred this way, then this inducement is not valid because it did not take out this high. But saying that the inducement take out this previous high, then this is actually valid and you can consider it an inducement and you can take your entries from there. All right. So like I said before, we're going to be having a whole video on inducement. So for now, just take this and digest it. All right. So when it comes to relative equal highs and lows, for downtrend, okay, I said it before, for relative equal highs and lows, we do not want to see one leg higher than the other. All right, let me explain. For downtrend, okay, when we have this, for downtrend, we do not want to see the right leg longer or shorter than the than the previous leg. Okay, so we want to see that okay, this leg comes and it's equal with this. We do not want to see that maybe it's shorter this way or longer. No, we want to make sure that both legs are equal. Both legs are equal. That's very important. All right. So for equal highs, we want to make sure that both highs are equal. All right. We don't want to see the second leg like this or like this. No, no, no. Relative equal highs, they have to be equal. They have to be equal. All right. Now, something else you must know about liquidity is that when the support or resistance becomes tested a lot, okay, or when price tends to test support and resistance a lot, liquidity lies below there. Okay, so maybe when you see price do something like this, let me give you an instance. Okay, now when you see that okay, this area got tested a lot, all right. Now this support level now, see how many times it got tested. So now this below this support level, we then have liquidity line below it. Okay, we then have liquidity line below it. Or when a resistance also gets tested a lot, let me do something else with that. When a resistance gets tested a lot, liquidity lies below it, above it, sorry, or we get to see something like this. All right. So when we get to see something like this, all right, now you must understand that liquidity lies above it. Very important. Okay. So when the support level gets tested a lot, or when the resistance level gets tested a lot, you must understand that liquidity lies below and above it respectively. So I think that'll be all for liquidity on this video. All right. We're going to have other videos on it. So for now, I think we're going to end this right here. And I'll see you in the next video. It's King and I'm signing out.